Welcome to the Broker's Lounge with Eddie and Carlo. Disclaimer, the information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.
Hello to another episode of the Broker's Lounge. As usual, Eddie's with you here, but today I'm joined with Martin, replacing Carlo. Martin is our senior commercial broker at Link Wealth Finance, and we'll be discussing commercial topics today, things such as the insurance premium funding. We'll be discussing ATO debt and its implications on borrowing and how it's looked upon by lenders. So it's going to be a bit different, but definitely exciting. Martin, how are you?
I'm well, thanks, Eddie. Yep, hopefully we'll try and do things a little bit differently today, but
That's it.
We'll keep those excitement levels.
You've got big shoes to fill.
I know. I quite often look at Carlo's shoes and think they're
pretty big,
quite sizable. So yeah.
All right. I guess if we start with insurance premium funding, so what it is, what is it, and who needs it, and what are the things?
Look, great questions, Eddie, and really, what is it? It's personally, I think it's one of Australia's best kept lending secrets. Not every bank does it, but there are a couple out there that do it. But for some reason, they keep it really quiet. I don't understand it. I've worked for one of the banks, and it was, even within the staff there, a lot of them didn't know what it was. Look, in a nutshell, we all have insurance premiums. So do businesses, whether it's car insurance, fleet insurance, home insurance, that kind of stuff. And I'm sure everyone knows that they go through, every year you go through a process of reviewing your premiums. What can you do? If you pay monthly, it's this. If you pay annually, it's this. Sometimes they'll let you pay monthly or quarterly, but you end up paying a premium for doing that. What insurance premium funding is really, so it's a small amount of funding. The minimum level is $5,000 for most of the lenders, and they'll structure a facility over 10 or 11 months. Pay it off in full. And yes, there's interest on that, obviously, because the banks take their interest, but the amount of interest is often far less than the premium loading that the insurers will put on.
Okay. So it's basically you're paying your insurance as if you're paying it annually. You're getting that discount on it, but you're doing it through the lending, which will save you
the difference, the arbitration between what you're paying on the interest and what you would have paid on the extra premium loading is less, and also importantly, it's a cash flow benefit as well.
Yeah,
because rather than finding one lump sum on the 1st of April, whenever it is, you can put that into monthly payments. And cash flow, I think I said probably the last time I was here, cash is king. And so if you can spread the payments, there's a benefit to doing that. But quite often, even if the overall cost was more, doing it this way, it still provides a benefit in terms of cash flow management.
Okay, that's interesting. And is that for all businesses, or is there certain businesses that you can't do that for?
It's generally all businesses. If you're there, able to sort of trading and demonstrate a trading history and that kind of stuff, it's probably easier to say what kind of policies you can do, and that's ranging from professional indemnity, motor fleet insurance. You even had a customer before had a whole fleet of vehicles. All the registrations were due on the same day. You can stick that through it. So that spreads it out.
So like we pay our PI insurance every year. So if we do that through the insurance premium funding, this will allow us to pay it monthly. And spreads the cost and
save on the premiums. If your insurer is, and most do, if your insurer is loading the premiums for the monthly payments, you get that benefit there.
And the lender that you'll get the funding from, do they need to, have they got a certain criteria of what insurers they approve, or it's up to you who you choose?
No, it's generally, as long as it's a recognised insurer, you're good to go. You'll just need to provide them with the policy renewal note, and that's good. The one I didn't mention before but the big one that it really works well for is work cover. And so work cover premiums are due, that August, September type time. Work cover almost go the other way. They offer you a discount if you pay in full.
Yep.
And that discount can typically be about 10%.
Yep.
That's what they've done in the past.
Okay.
So if you get funding and it costs you 8%, you're still 2% in, quids in, and the work cover is a big component. And yes, they do offer, I think it's monthly or quarterly repayment things, but you don't get the discount.
Okay.
So this is the way you get the funding, pay up front, get the discount, and fund the rest over the same term. So that's it's a phenomenal facility because that cash flow impact is significant. Something like work cover.
I've never heard of it.
Yeah, that's what I'm saying. You've been in banking. I've been in banking 20 odd years before I worked for this bank, and
that's when you heard of it.
And it was like, oh wow, you do that.
Okay,
why wouldn't you?
All right.
But most of the majors aren't really interested.
Yeah,
one of them does it and does it well.
Okay.
The application process is streamlined. If you've got an ABN, you've been trading a couple of years, and especially if you've used that facility the year before, it's pretty much almost a tick and flick.
Okay,
just put it through, done it, and pay it out. Okay. Especially with work cover, they'll compare your premiums against last year's. Check your track record last year was paying all right, and it's like fine, and you can go up to like 250,000.
Wow, and it's
lending
1 year term, is it?
10 or 11 months.
10 or 11 months. Okay, and what sort of interest rates you're looking at? Like if they obviously it depends, but what's the range? Standard
equipment finance rates for what they would call
7-8%.
But you're talking about 8% somewhere. It wouldn't be north of that.
All right.
So and it's with the work cover, and we talked about the 10% discount previously.
Yeah.
The interest rate has always been lower than the discount that you get from work cover.
Yeah.
So
all right.
And as I said before, price and ultimate price isn't the only thing. That cash flow management is a
100%, 100%. And like running a business, your cash flow is the biggest, thing that you try to manage. So if you can do that, absolutely, especially if you're running a bigger company where you've got like a fleet of cars or you've got so much work cover and all that sort of stuff, you'd be like 50, 60K out of pocket. If
it's a big lump. And yes, you might have that cash flow management ready. You have an overdraft that you might dip into, but the overdraft borrowings aren't going to be cheap either. So for that,
I wish. Do you have like numbers? If I ask you, like if someone's premium is 50K, let's say, and they choose to pay it monthly, that would take them up to 60K. If they do the finance, they'd probably end up paying 55. Is that like how it's would
probably
roughly?
Probably about right. 50 grand and 10% interest, you do it. Remember the amount that the interest is amortizing over the term as well, so it's not going to be the full 5 grand.
Yeah.
Every insurer is slightly different with how much they load their premiums as well, so it's not easy to give a sort of a one answer for everything. But there's definitely if people have policy premiums coming up or renewals coming up, give us your renewal notice and we can have a look at it. And the great thing is also, I've often had the question, but I haven't got any security to offer, or the application is sort of just for an insurance premium.
Yeah.
So the application process in 99% of the cases is extremely streamlined. It's really just ticking a few boxes around ABNs.
They don't need security. They don't need
to provide security. The vast majority of the insurance policies that we're premium are cancelable, and therefore there's a refund due. So the bank actually just takes a sort of a lien over any refund that will be coming, and that's their security.
Okay. And who do you recommend to consider this like if I've paid my insurance, let's say 3 months ago, in full, is it worth cancelling, getting a refund, and doing that?
No, I wouldn't say it's worth cancelling that, because you've already paid a fair chunk of it and a fair bit of premium. You're just going to sort of double up on that. It would just be worth diarising.
When the renewal
2 months before when the renewal comes through and touching base. Then anyone who's got fairly hefty PI cover, professional indemnity, it's worth doing. Work cover, especially if you own things and employ people, your work cover bill is going to be high. It's been increasing in Victoria, especially. It's been increasing year on year, quite way out of sort of the line with everything else. So Any material work cover premiums. As I said before, fleets, they have both sort of road tax and motor fleet insurance.
Yeah.
If you're insuring things, it's probably worth looking at.
That's a very
minimum $5,000 is
Okay,
the premium funding amount. So.
very, very niche market, but it's definitely great to know. Like, yeah, there's so much out there. Like, I've been in banking for over 10 years.
Yep.
And I never thought like someone would be funding insurance premiums.
No,
There you go.
it's great. It's so flexible. It covers so much stuff, and it just, for me, really all the benefit is in that cash flow smoothing out and that management. And if you can get some arbitrage on the interest rate, that's great. That's the icing on the cake.
All right, cool. Anything else to add on that insurance?
No, just typically, I think I said it before, but the actual application and process to do it is nice and smooth. I've done one before where you can get things turned around in 24 hours.
Okay,
Simple.
it's quick.
Yeah.
All right, perfect. A2I debt.
Yeah,
that's the fun one.
everyone's favorite subject, ATO stuff.
Yeah.
Yes.
So if I've got A2I debt as a business and I want to get some funding, I've got a cash flow issue. I need something quick. I need to do something. Do I have any options at all?
Look, you do, and I guess first and foremost, all of the majors, all of the main bank, well, probably most lenders would prefer you didn't have ATO debt, right? They would prefer, because in business and commercial lending, part of your assessment of the proposal is the management ability to run the business. It's not just your P&L and your security. It's actually, especially if it's unsecured lending, can this management actually run this business and do what's required? Because that's how the lenders are going to get out at the end of the day. For me, there's two different scenarios, so your ATO debt is either your income tax, and that can be for a great reason. You could have an unexpectedly fantastic year, make a load of profit, and suddenly you've got a big income tax bill that you hadn't really expected and hadn't really budgeted for or allowed for. And the accountants will tell you the ATO will most likely put that on a repayment plan, 12 months, 24 months, whatever it is. And that's great. So you've got the problem solved. The lenders will need, though, that's a liability that the business has.
Yeah, they'll expense it.
So that comes in. So when you're looking at debt servicing,
they're expensing that.
They're expensing that, and it can be quite hefty, and it's over a short term. So 100%. If the ATO wanted the money back in 12 months, you're amortizing all of that in a year, which is often has a serious impact on your ability to borrow money because your debt servicing capacity is not there. So we can be high and mighty and say, they should have had the ATO debt, but things happen. We know that. So banks, especially with the income tax stuff, if there's a repayment plan in place and you're secured, they're more than likely to go ahead as long as you can confirm you've got overall servicing capacity.
Yeah.
So if you can service all your liabilities, all the ATO and all your other expenses that come through and it's still a surplus, they'll go ahead. The other one is the BAS though. And banks generally, 20, 25 years of experience. For me, there's a massive difference between a debt relating to income tax and a debt relating to BAS. Because BAS, you get the money in from your customers and then you spend it out, and it's obviously the net, but there's a control of cash issue. Now, whether that's control or whether it's a demand or a need by
if your BAS is negative.
Else. But if you are owing the ATO BAS, then something's happened because you've collected
and you
more than what you owe at some point in the last quarter or the month, whatever it is.
100%.
And that's then when banks start to get a little bit worried about, management's really on the ball here.
Yeah, exactly.
And again, that comes down to that cash flow management and, using the resources you have.
Yeah. Okay.
And because that one is more obviously identifiable as to how much BAS that you're really going to incur, that's the one that causes the banks the most concern.
Okay.
I think of that. But again, things happen. We get that. Banks get that. And if there's repayment plans in place, it goes back to the other one. It's where banks have security these days, because it's a sales game. They all want to, sell the loans. Where there's security, far easier to get the lending through when it's ATO.
So what are your options if you're in that situation? Big banks, they don't want to touch you.
Yep. So that's when those sort of secondary, tertiary lenders start to come into play. They will take a more, don't want to say relaxed, but they're more
risk.
They're more open to helping out customers in that. And
they're charging you for it.
They'll charge, absolutely. So but at the end of the day, it's it's not a charity. It's absolutely not a charity.
They charge you higher fees, and
they're prepared to make the funding,
because that's the market they're playing.
Yeah, and pricing in any bank lending is assessment of risk. So there's clearly more risk here. They're prepared to take on that risk, but they're going to charge more. But it gives you, as the customer, the ability to go, actually, I can secure some quick and easy funding to help.
100%. Yep. Okay. Yep. And what about low doc options? Like, would they still, someone's got ATO debt.
Yep.
And they go down the low doc path.
Yep.
They don't need to show ATO portals. They don't need to show BAS statements.
Yep.
Self-deck.
Yep.
How does that work?
Well, again, I mean, the low doc, that's just really essentially a self-declaration that you can afford it.
Especially on the commercial side. Like, it's non-NCCP. So it's just like
zero
liability on yourself.
I always laugh with the low docs because it always takes me back to, it's almost 20 years ago now, but the GFC, when all that came up, and, the buzzword going around at the time was liar's loans, right? Because, you just self-certify that you can afford it. Low doc self-certification, you don't need to worry about the ATO in terms of getting the funding, because you don't need to disclose it and stuff like that. But you still got there's a problem there that you've got to resolve in some shape or form. So for your business to survive and get that longevity, you need to resolve what that issue is.
Yeah, true.
And you still need to be able to support the loan and the servicing, because it's still there. At the end of the day, whether you declare it or not, the ATO debt will want to get paid.
Yeah.
And ATO, it tends to be quite cyclical in terms of how easy it is to get funding or how relaxed they'll be about arrears.
Yep.
And you'll often find, so, during COVID, ATO, they didn't really care. They weren't going to follow anyone up around ATO debt, because that just wasn't the thing, right? It's not the right time, not the right place. Government doesn't want it because it's too much bad news.
No, they're back.
Leading up to an election, you'll probably find that the ATO are a little bit more generous around doing stuff.
They're not at the moment.
Well,
like now they're.
But at the moment, they're still catching up on COVID.
Yeah, exactly.
So they've got I've seen some 7-figure ATO debts.
I had a client of mine yesterday call me, and they got a massive income tax bill of $5 million, which they weren't aware about. And that's due to the fact the way they declared the income that they were paying on a weekly or fortnightly basis, it was different to the ATO, and the figures did not match. Obviously, their turnover is huge, but still, like $5 million tax.
Yeah, and also, just because you've had the ATO have helped you in the past doesn't mean they're going to.
No,
I remember
no help.
a few years ago now, but again, working with a colleague, he had a customer, 7-figure ATO debt for the last 5 or 6 years. They'd always gone to the ATO, can we put it on a payment plan?
Yeah.
And they go, fine, tick it off. They pay it off in 12 months. Job done. Move on to the next one. Can we get, this time ATO turned around and said, nah, give us half.
Okay.
And then
maybe because he got used to just
and it's just I suppose their appetite changes, their demand depends where everything is. So that's the one message. Just because they've supported you and helped you in the past, it doesn't mean they're going to do it again. But really, for me, it's getting down to the root. So if I go back to sort of the main banks, yes, they'll help you if they can prove servicing and that. But if you start getting to the bigger sort of the commercial end of business borrowing, especially when there's no security, they really want to know what's changed with internally to make sure that this doesn't happen again.
And I guess the conflict happens when between accountants or the plan that they've
Yep.
got for the business, just to get them over the cash flow
Yep.
stuff and manage that debt.
Yep.
And lending, where these clients want to get some lending done. And most accountants let's just get a plan, pay in monthly payments, but then the effect it's got on lending is massive.
And that's what the accountant's job is, to help their, they've got a problem, here's a solution, ATO will help. Great, they do. Again,
But it's not always a good solution.
No, well,
like if you're limiting your options to be able to get finance. Yeah, so this is limiting your options, because if you're running a business, you need lending during the year, and if the accountant did not take that into consideration and you've got that ATI debt, it will limit your options.
It absolutely will. And, I would hope that an accountant would be more sort of holistic in their viewpoint. And you're absolutely right, they do. I've had so many conversations. I say the customer gives me a proposal and I say, oh, ATO debt, talk to me about the ATO debt. And the accountant said it'd be all right.
Yeah.
So, well, it is all right from the ATO's perspective. They've agreed it. He's solved that problem.
But now, would say,
absolutely. Now you're coming to me, you want to buy another property or whatever it is, and now it actually becomes a problem.
Exactly.
Because maybe the repayment profile is too aggressive.
And I truly believe the accountant's role is more holistic than just tax advice.
Certainly should be. And a good one will be.
Unfortunately, a lot of accountants out there, they're just tax agents.
Yep.
Pay your BAS, pay your tax, reduce as much as possible of your income tax, and that's it.
And that's actually going off on a tangent here, but that's a perfect example of how a business grows.
Yes.
Its needs grow. So the tax agent or the bookkeeper that you have when you start off might actually not be what you need when you're 3 or 4 years in, you're turning over 5 mil,
100%.
You've got staff employed and all that kind of stuff. So
absolutely.
I've seen that before as well, is whether it's a lack of awareness of what else is out there, or an inability to let go of a mate, or your dad's best mate or whatever who does it. I've
Loyalty
seen all in the past.
They might be great people, but as you advance in your journey, you need something complicated,
more. Absolutely.
Structures, trusts, all that sort of stuff, distributions. Be mindful of the full situation, and they with you on the journey as well. Like they're advising you of what to do next.
Absolutely. And for me, a really good accountant will be engaging the bank. And making sure that, and so the bank is more comfortable as well, because they know they've got that professional support. Engaging the bank and saying, well, okay, well this, or a broker. Engage a broker. Don't engage a bank. Engage a broker.
I think
I said 25 years, Eddie. It's hard to let go. But
detoxing is hard.
Engage that person who is helping you with your funding, to making sure that what you end up is a position that is the best of everything.
But just for the record, if you've got ATI debt and you're in a complicated situation, most probably the bank that you're dealing with will not be able to help you anyway. So you will need to engage a broker to look for options that you haven't got access to as a consumer.
Correct. For those, there will be a lot of occasions where the banks say, no, you need to sort that out and then come back and we can talk about this.
Then you need to go second party or third party.
So we start looking, and this is where the brokers come in, because we can look at different providers. And look, changing a business bank or changing any bank account is difficult, but changing a business bank, there's so much more creditors and things that are coming in, money coming in and out that you have to tell everyone, right? But there are these secondary, tertiary lenders that will give you that quick fix.
Absolutely.
And yes, you pay for it in terms of interest.
Look,
depending on the amount, though, the dollar amount isn't necessarily huge. It's just the interest figure. It looks quite high. But it's a solution. And it's then a pathway to going back to your main lender and go, right, now, I'm good now. Let's talk about project.
True. And speaking to a broker, like even if you don't want if you can't or you don't want to go down the commercial path, there's even residential options for you to pay your ATI debt. Obviously, it's not recommended because you're utilizing the equity that you've got on your a residential property to pay that ATI debt. But if that's your way out, then you should
and that's a really great point, Eddie, because we talked about the banks, the big banks, accepting the position as long as you can prove the servicing. Not many of them within policy would fund ATO debt. Now, if you've been with that bank for 20 years and you make them a lot of money and you say, I need help, they probably get it through.
Yeah, like
But
if you've got a
it's outside of
business
policy.
banker or
It is
private lending or whatever.
It is generally outside of policy to fund tax debt.
Yeah, they
and then
hate
this
it.
is where those secondary and tertiary ones are. We'll come in, we'll do it for you.
Yeah,
So,
I guess if we are to summarize what we talked about, like there is options, even when it feels and looks like it's tough. It's you know, you're going through a rough patch. You've got ATI debt. Your cash flow's not, you know, working for you. Like if you do the insurance premium funding, you know, that would save you a few $1,000s, and then you fund your ATI debt. That would save you a bit more, and then you'll make sure next year you don't make the same mistake or go through the same thing, and slowly.
And that's really where the expertise or the knowledge of what's available as a broker comes in, because 3 out of 4 people who bank with the majors in their business banking go to their business banker and say, "Can you fund this insurance premium?" They're going to go, "No."
Yeah,
one lot will.
Yeah.
But us as a broker can come in. Well, we can get that done for you.
Yeah.
And as I said, there's a couple of players as well.
Obviously,
they don't need the other security.
You don't want to share the names.
I think you come and give me a call and we'll share the names then. But you know, we can structure it so it doesn't interrupt or impact another lender's banking out there. So,
yeah, absolutely. So yeah, absolutely. There's always an option. There's always a solution. It's just knowing how to put it, how to structure it, what to look for, where to go. And yeah, you definitely don't need to be stressing and going through whatever you're going through. You know, like when it comes to lending and finance, there's professionals that they know what they're doing and they can help you a lot really in achieving your goals and growing your business rather than stressing you out and not knowing what to do. So as always, if you have any questions, you know, if you want to have a chat, whatever, you can find our details online at any time. You can reach out to us. Otherwise, thank you, Martin.
No worries. Thank you. Thank you for having me again.
Thanks, mate. Always a pleasure.
We'll hopefully be back very soon.
Definitely. We'll do another one on other topics because there's heaps in commercial to cover. So
much more interesting stuff than ATO debt.
Yeah, absolutely. So yeah, until next time, thank you very much for listening or watching. Please leave us a review, subscribe, and see you next time. Ciao.